Here's the thing happens to the real estate housing market in the next 12 to 16 months. As of today, the Fed has raised rates faster than any time in U.S. history. This has not only had an effect on our economy, but many others around the world because the U.S. dollar is the reserve currency for the entire globe. Because of the rapid increases, the residential and commercial real estate industry has experienced a dramatic slowdown. According to the Case-Shiller Price Index released in November, prices fell in all of the top 20 U.S. cities from August to September. Now, many people have decided to sit on the sidelines and to wait, as many of them expect the market to crash. But there's another side to the story. On one hand, you have many home buyers that got into these 3% loans when they either purchased or refied 12 to 36 months ago. For these people to sell now and get into a new house, they're going to pay much more money to get the same house at a higher interest rate, nearly 6% today. As you can expect, it's not in their best interest to sell. Now, if the housing market were to just bottom out and crash, those same buyers will not be able to unload the current house as it would be underwater and they lose all their equity. It makes sense for them just to stay put. I personally don't see a lot of inventory coming to the market. I do believe that there's some trend downward. We're going to still see some houses hit the market, but really nothing's going to happen until the Fed stops raising rates. And if the Fed starts lowering rates again, things are really going to start heating up again. And I believe that's really where it's going to happen. People will get back into the buying mode of houses and commercial real estate. I'm not saying there's no deals out there. In every market and every economy, there's always a deal somewhere. On trying times like this, it comes down to getting in front of the right people and getting creative on putting deals together. It could involve owner financing, negotiating a lower rate, or networking to find a property that is way under market and the seller just wants to get out. Good investors are always getting deals no matter what the market is doing. It comes down to being aware of what's going on and shifting to the asset classes that you're targeting. So if you're looking to get into real estate, don't despair. You have to keep looking no matter what happens. This is a trademark of a good real estate investor. See you in the next video.